We're going to give a few more minutes to the folks. Hopefully they can jump on here in a few minutes and we'll get kick started. Hey, Matt and Alex, can you guys see my shared screen? Still coming in good?
Yes, sir.
All right, it's 6 now. We still got some folks rolling in. We'll take a little bit longer. I know it's been a long day. Try to get everyone a little bit more time to jump on. I have a few more people jumping on. Thanks for making it tonight, everybody. We'll give it one more minute and we'll get kick started. All right, it's 6:02. Why don't we go ahead and get started? Hello, everybody. My name is Jason Ricks. We're really excited to be talking to you today. We've got, Alex Coffman and Matt Teifke here with me as well. Hey, guys.
Hey, everybody.
Before I get started, a little bit of housekeeping. We really want to hear some feedback from you all. Feel free to go ahead and leave some questions for us in the chat box. At the end of the webinar, we're going to go through a Q&A section. So we'll try to shoot for around 30 to 45 minutes total in the webinar and then try to answer as many questions as we possibly can without going too far over. And then any questions we can't answer in time, we will happy to coordinate another time or shoot you an email with any questions you still have. But we're very excited to talk about our fund. Matt, Alex, and I talked about this, early last year. We were really excited to get this kick started and really the genesis of the reason of why we started the fund. We had a really tremendous track record of syndicating and doing one-off partnerships. And it was really successful for us. However, the biggest pain point is it wasn't the most efficient business model. And we just missed out on so many opportunities. And so that was really, what's a mechanism that we can create that's going to help us scale and take advantage of these opportunities and not miss them and really create the most value through our value add strategy and approach. And so that's really how the fund came together. And how we add this value for everyone is we have, Matt and Alex have built a tremendous team. I think we're up to like 150 agents at this point, which is phenomenal. And these individuals are bird dogging deals. They're finding off-market opportunities. And really our niche is not to go after the big stuff with all the institutional players. We really want to find the hidden gems, those one-off duplexes in Central Texas that no institution is going to look at. and just buy a tremendous amount of those types of assets and make a lot of money on the buy. And so part of our process is we're very vertically integrated. This is a fancy way of saying we control it, from end to end. We have the agents finding opportunities for us. We've got the in-house management. We've got in-house construction, leasing, and brokerage. So controlling the cost gives us a competitive advantage. And then we couple that with, all the tremendous opportunities in housing in Central Texas. The numbers are off the charts. We're so excited for the next 5 to 10 years for Austin and surrounding markets. Every day we're seeing new tech companies coming here and creating hubs. We're seeing the demographics improve. Houses are still affordable, and there's tremendous supply and demand constraints, which really positions what we're shooting after. It just gives us a huge advantage. And that again, just targeting our niche and going after what we do best, we just feel like the next 5 to 10 years is going to be tremendous for housing. So with that, we're going to go and kind of break this up in our presentation. We're going to first kind of talk about the history of the company, the leadership, how Matt and Alex have created these tremendous entities. We'll go into some, the growth fund overview, which is talking about the dynamics of housing. We'll get into why we love Central Texas. All the fun things that are happening in Central Texas. We'll get into the return metrics. And then lastly, we'll kind of go over kind of our key takeaways, core values, and get into the Q&A. So without further ado, I'm going to turn it over to Matt and Alex. They're going to kick us off. And Matt, kind of tell us about how you started Trey, kind of your story behind all these businesses that you've created.
Yeah, absolutely. Thanks, guys. We're super excited. This has been a long time coming, and we'll try to be pretty brief on these slides and leave some time at the end for Q&A, because that's what I always find most important. But like I said, I started, a long time coming. I started when I was 17 years old, and really started from seeing my mom buy real estate when I was growing up. And single mom, she ended up, I think she's got maybe 20 houses at this point. And I saw the power of real estate. And I was just so blessed and fortunate to understand, one, how to buy real estate, and two, what it meant to actually own real estate, right? In the sense of what it means to own real estate in Austin, Texas. You're not buying these properties and retiring early on the cash flow. And so I learned how to analyze and understand and how to approach real estate from an early age, and was just very lucky to be from this market and seeing the growth. Actually, Jason and Alex were all from Austin, which is a really, really big advantage. We can get into that in much more detail, but I was thinking about today, like everyone's moving here and everyone's paying crazy prices, and nobody really understands the value of things, but we do, and we're not getting swept away in that. But, started in the brokerage business. My whole goal was, let me understand how other people are buying and selling real estate, and then start doing that on my own. And as soon as I could, I started trying to get loans. I was unable to get conventional loans. I had to understand hard money. I had to understand private financing, and really learned how to get extremely creative to get properties, because that was always my goal. I want to buy as much real estate as I possibly can. I want to be smart. I want to be aggressive, and was kind of thrown to the wolves and just said, hey, go figure this out. And so it kind of created this really unique mentality and mindset on how to analyze and look at different deals. And we'll get into all that. But ultimately, we've created a real estate brokerage. It's been 13 years now. And the big goal of our brokerage is really important to note. We're not focused on getting your sales volume up. We are saying, hey, come to TRE and get more out of real estate for yourself. So we're pitching this that we believe in to our agents as well. And what we've done is created like an army of deal finders. These guys are finding opportunities, bringing them to us, and we're telling them how to get the deals done. And I tell everybody, like, if I had this structure 10 years ago, I'd own 10 times as many properties as I do now. So we're really creating something special. to have built-in partners and built-in deal finders. Alex and I teamed up about 2.5 years ago, and we really, really make a good team. And we just couldn't be more excited. So the company is important to note just because it's a huge asset for bringing these opportunities to us. And like Jason said, we always understood the other aspects of real estate are just as important. And so property management, construction, renovation, operations are just as important. But really what we're trying to create is a deal finding machine. And so that's kind of general overview of the company and where we're going. And we feel like we're really set up in a good position to capitalize on this growth. And we say, I personally believe Austin's one of the best markets in the world. But what we say is TRE is Opportunity City. And so people are coming here to get more opportunity for themselves. And what's happening is we're finding good people and we've figured out how to go grow together.
Yeah, I love that, Matt.
Yeah, thanks, man.
Matt, do you want to just kind of go down each partner? I know we briefly introduced ourselves early. Maybe we can each kind of spend some time and just kind of introduce ourselves real quick.
Yeah, I'll just do just to do a quick overview on what I think is important is we're all from here. Like that's a big deal. And we all have different skill sets. Alex and I are partnered up on the real estate brokerage. I'll let Alex talk in a second, but then Jason's got a different perspective, and he's more of the analytical, asset management, crunch the numbers type of guy. And so there's completely different personalities here, but we all work really well together. We've known each other. Jason, we've known each other for 5-6 years. Alex and I have known each other since we were little kids. And obviously that's extremely important because we mesh well and we work well together. But yeah, just real quick, I know I talked a little bit about that, but I started when I was 17 years old. My first year in real estate, I was rookie of the year in Corpus Christi. I mean, it was like grinding. Like I've always treated real estate as I'm going to put as much time and effort and commitment as I possibly can since that time period. And I haven't let up. And so rookie of the year, ended up working at a commercial brokerage, got my master's degree from Texas A&M, went and worked at a really high-end retail brokerage called Edge, and then started my own firm about 5 years ago, and then about 2.5 partnered with Alex. But I'm a through and through real estate guy, and love this market, love real estate, and I'll let you guys talk more, but I'm just super pumped up about the team that we have in place.
Yeah, man. Thanks, Matt. Hi, everybody. Really excited to be here today. Like Matt was saying, we all make a really good team, and a little bit about myself. And most everybody here knows Matt. So, Matt probably met you at a coffee meeting or maybe viewing a deal together. And while Matt's out doing that, I'm the one who stays in here in our office and structures and runs our operations. And so when Matt and I joined forces, prior to that, we were just investing in real estate together. And really that's my background in real estate is, I learned everything from Matt. First and every single deal that I've ever bought has been with Matt as my partner. And we own quite a nice portfolio now, but I learned everything from Matt, really kind of strictly from the investing side of things. A few years ago, we were just contacting off-market owners. We were making a bunch of offers on the MLS. We were sourcing deals, wholesaling deals, keeping some buy and holds, flipping some properties. And at some point along that journey, Matt asked me to join him here at TRE. And like Matt mentioned, it really has been a perfect partnership coming together on the brokerage and everything else that's grown from that. But my main role here at the brokerage and with all of our other entities here under the TRE umbrella is really kind of operations, setting up systems and operations to grow and to scale. We have some other partners that run the day-to-day operations at the management company, at the wholesaling company, at the construction company. But me and our staff run all the operations here at the brokerage. And we've grown quite a bit. this pitch deck is a little bit old. I mean, we would have to adjust this pitch deck every day to keep it accurate with kind of where we're at now. But we have, over 130 agents right now. We've got a nice marketing department, full staff. Matt's wife has actually rejoined us as our vice president of Teifke Real Estate, the brokerage. And we're just kind of running and gunning. And like Matt mentioned, our big focus at the brokerage is not to be the traditional real estate brokerage like KW or anybody else, but our focus is to teach our agents to make money in and on real estate, in real estate as an agent and on real estate as an investor. And it's really turned out to something special to where us and all of our 130 plus agents are out there finding and buying deals.
No, that's great, Alex. Jason Ricks, as I mentioned earlier, first and foremost, I'm big believers in Matt and Alex. I was an investor with them. And when Matt and I first met at some meetups, God, it was 5 or 6 years ago, I knew I wanted to be in business with them, but we had different skill sets. I come from more of an institutional background. I work mostly in commercial real estate. So, larger multifamily developments, a lot of retail, industrial, and office. I've got a lot of underwriting experience, asset management experience, and also experience in running a fund. Most recently, I was overseeing a private REIT. I had a portfolio of about $500 million worth of assets that I oversaw and reported to Morgan Stanley on those. We had really complex arrangements with, the city of Austin and a lot of other key players that made me want to pull my hair out at night working with the city. But really where I kind of came in is I connected the dots. Matt and I were talking, and Alex, what their struggles were, what their wins were in previous years. And they told me the friction they were having, they were finding great opportunities. They just could not raise capital fast enough and deploy it into all these deals. And so that was really the point of frustration. And with my experience of running and operating funds, I said, guys, look, I have the blueprint. Let's put it together. You guys do what you guys do best. I'll run the fund admin, quarterly reporting, make sure the underwriting's nice and clean for our banks, and doctor everything up on the back end, whether it be, the legal, the taxation, et cetera, maximizing cost segregation, which we'll get into here in a little bit. Alex, you want to talk about, I know we talk a lot about the different companies of TRE. Do you want to kind of take us through the genesis of Trey Holmes and kind of where we're at today?
Absolutely. So TRE Holmes has been around for quite a while. Matt, when did y'all start TRE Holmes?
That was started in 2013.
2013. That is when Matt and his wife Lexi started TRE Holmes. Started out as a property management company, and they grew the property management company to quite a large scale. Ended up partnering with another local property management company here in Central Texas, and they ended up selling their portion of the new merger last year. And since then, now we've brought TRE Homes in-house, and we'll manage all of our properties and all of our assets. And we have, almost a decade worth of experience doing it. We got the staff, we have the knowledge, and Matt's wife, Lexi, is actually the one who spearheads TRE Homes, the property management arm of TRE. And it's done really, really well. TRE, Teifke Real Estate, the brokerage, we just got done talking about that. But we are growing quite a bit. Most of our agents are located here in Central Texas. We do have some in Houston and in Corpus Christi, a couple in San Antonio, a couple in the DFW area. And each city is growing as well, but not as much as here in Central Texas. This is where the majority of our agents are, and this is where our headquarters are. Longhorn Construction and Development is a construction company that Matt and I partnered up with two other partners. Longhorn Construction, powered by TRE. And we really do a lot of residential remodels here. So some custom work, kitchens, bathrooms, flooring, no new development at this time, but it's been very, very successful. The guy that we partnered with, he had this company, and he was basically just running with his, subcontractors, just like any GC does, but he really kind of struggled being able to grow and scale it out. And he was a, one-man shop. He was doing everything, right? And he reached a point where he couldn't go any further with it. And so with this partnership, TRE was able to bring some operational experience, being able to grow and scale out the construction company, as well as sales with all of our connections and all of our marketing. We have a really good reputation here in Central Texas, and we're constantly busy. There's never much downtime, and they're always doing really, really good work. TRE Property Solutions is our acquisition arm. So what we do here is quite a bit of wholesaling, where we'll either assign contracts from the seller to an end investor and keep the difference in those two prices, or we'll double close on some deals too when necessary. But also too, what TRE Property Solutions does is it just sources these deals, right? So we source these deals constantly. We have about 5 people full time that are door knocking, cold calling, texting, off market property owners. They're also making offers on the MLS. And all day, every day, this company sources good deals for us to either wholesale or for us to purchase. We may flip them, we may keep it as a buy and hold, but this is our acquisition arm of TRE. And it's basically just a team of Navy SEALs, and all they do is find good deals for us to either dispose of or keep internally and purchase ourselves.
Yeah, it's a great process. The volume of offers that this team generates on a daily, weekly basis is staggering. Really built some tremendous companies here. Matt, Alex, maybe you guys can talk a little bit about, why we like single, small, multifamily, residential land, mobile home parks that are right underneath that institutional interest, right? So not the big monster apartments, but kind of those that get kind of lost in the shuffle, and just kind of give me some historical context around occupancy and just the value add process you guys do on a traditional deal.
Yeah, absolutely. Well, real quick before we get into this, I just want to say, to touch on what Alex talked on, it's really important. We've basically created like this full scale mechanism to finding deals, right? So our agents are finding deals, our wholesaling companies finding deals, our construction company sends us opportunities, management, and so forth. So it's really created this system where just opportunities are coming in. In general, housing in Austin, Texas, Central Texas, I think we're all here for a reason. It kind of speaks for itself, right? One thing I learned at A&M is everyone always says location, 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 but also timing, 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 and jobs, jobs, jobs for real estate. And we try to be smart, and we try to be careful and not get swept away and just think that things are going to go on forever. But it's hard not to in Austin, right? People keep coming here, jobs keep coming here. And there's a massive shortage of inventory that we see on a daily basis. I personally think the market's going to be just as hot, if not hotter than it was last year, this year. All the indicators and ways that we're plugged in show us things on a daily basis that is like market data that not everyone gets to see. Every time we get a listing, we're getting multiple offers. Even like literally yesterday, we had one with 35 offers in Hutto, Texas. And so we're seeing that, on the ground level, in the trenches kind of situation. And all the dynamics, the job diversity, the people, the housing supply, everything leads to, in my opinion, this is one of the best real estate markets in the entire world. And I personally don't see that slowing down. Historically, I think some of us know this, like Austin has been very resilient in most economies, even in the 2007, 2009 bubble. Yeah, there was a little bit of a struggle, but my mom owned a lot of those properties, and we never talked anything about the values of the properties. Like people were still paying rent. It kind of, Austin, and this is from me talking to people that have been here for 50, 60 years buying real estate. It always just goes up, levels off, goes up, levels off. Regardless of that, just on our strategy, we're not the type of people that get caught up. We're not in bidding wars. We're not getting swept away and paying top prices. We're still staying aggressive and sticking to our fundamentals of as far as what we know and understand about real estate. And that's always just lines in the water, make the offers. Everyone I talk to, and it's like one of my biggest pet peeves, it's so hard to find deals in Austin. And I tell them, I have never met anybody that spends 8 hours a day that has said that. Just never happened. And so that's for the people that get on Zillow for 2 hours a night. For the people that are making 60 plus offers a day, which we're doing, the opportunities are still there and the demand's there. So it actually makes it a lot easier. But back to the market, what I've personally seen is prices have gone up like crazy. Rent has not kept up with that historically. And I see that changing now. I see rent starting to creep up as there's less and less inventory. I love the employment base as far as the diversity. You got tech, you got government, you got education, financial services. There are so many companies and people. It's like a new company comes here or a new headquarters every day. So couldn't be more excited about that. Even comparing this to other markets, relative on housing prices, it's still cheap here. For people in Austin, they think it's crazy, but people from California come and it's a third of the price. And I really believe this is going to continue. However, like I said, we're not betting on that. We're betting on making the money on the buy, which is what I think makes this fun and what we do so great is we make our money on the buy. And as the market keeps going up, that's just the bonus on top of it. And so overall, I think it's one of the best markets in the entire country. I'm drinking the Kool-Aid here. I'm sure some of us are as well. I think it's the best market in the world. So we really believe with the market, with being from here, being local, and everything we've set up over the years, we're just really, really well positioned. We're not getting swept away in the madness. We understand the fundamentals. We understand what we're looking for. We have a team of people bringing us these opportunities. And the whole goal is to be aggressive, have tons of lines in the water, and to stay aggressive. We want to, like when we get properties under contract, we continue to negotiate. We'll drop it another $30,000, $50,000. And what happens is when you have a lot going on, you can do that, right? Everyone else is like, oh, this is the first opportunity I found in months. It's like, we got 20 of them and we don't care if we lose this deal, right? We'll get the next one because we are putting in the work. But the true value, as this slide will show, is there's a full spectrum of values that we can get across the chain that we're not overpaying for construction. We understand how to utilize and operate property management. We find the deals and we cherry pick them from our wholesale team. And then we have agents out there constantly looking for new opportunities and wanting to bring them to us and partner with us on the deals.
Yeah, it's a great mechanism and you control it end to end. It just gives superior returns to our investors. Matt, you touched on a lot of this. I know you and I could geek out on all the math and demographics. We'll kind of touch on some of these items here that Matt referenced, but back to fastest growing metro large cities in the United States. You've got Central Texas here. We've got Round Rock on here, New Braunfels. All the projections for Austin's population growth are just exploding for the next couple of decades. we look at, again, fastest growing counties, where they're at. When we look at Austin Central, we've got Hayes, we've got Bastrop, we've got Williamson. I mean, look at these increases over a 15-year period. It's just, we're just in such a tremendous opportunity for the niche that we bring. Matt, you touched on this, and you know so much about this. So, I get this question all the time. Houses in Austin are so expensive. But when you really you really run the data, look how affordable these homes are, right? I mean, Alex, you guys see these deals. A lot of investors are not looking in Elgin, Lago, Taylor, Lockhart. I mean, there's still tremendous value on the fringe, but you have to work these markets.
Yeah, I think that's one thing to really point out too, is everyone talks about Austin, and we actually very rarely buy in Austin proper. That's exactly what we are. We're Round Rock, we're Georgetown, we're Hutto, we're Spicewood, Kyle. Those are where a lot of these opportunities come from. And I think Round Rock gets overlooked, right? Prices haven't caught up. There's people in Austin that still don't know what Kalahari Resorts is and what's going on here. And that's okay. We will capitalize on that. But yes, most of what we're doing is in these surrounding cities where it is very affordable. You can still buy houses in Round Rock for $350,000, $400,000, where a lot of people think that that's super cheap from other places. You can still get really good rents. And there's a lot of good things. I could go on Round Rock forever. I mean, the city in general has a great tax base. They're aggressive on bringing people here, where Austin's kind of pushing people out on permitting and stuff like that. And so those are all little things that are huge value add when you know these areas. I know the mayor, I know the city council, and these are little intricacies that we utilize in our best possible manner to go acquire more real estate. So just like what you said, Jason, it's important that all these little cities that you see here, Taylor, Lago Vista, Elgin, I was just looking at a deal in Elgin earlier today. We love these markets. They're all experiencing growth from Central Texas, and there's just opportunity everywhere. And that's why we don't get swept away and we have to find it in Austin. Oh, we finally found one opportunity. Let's get it. We got other ones in all these other surrounding cities, and each city is different and unique, and we really understand them truly through and through, which is a huge advantage to what we're doing.
Yeah, totally agree. We've talked about this. We just, more data on inventory crunch, which is just crazy. We look at active listings down the way they are, total sales volume. I mean, it just, everything is off the charts. And again, just capitalizing on this inventory crunch is just so critical. Plus, to Matt's point, the city is not allowed, they're not being flexible in zoning, Matt, and you can't build cheap homes today. It's just the amount of fees they hit you with. You got to be a big player to build a lot of homes in Austin right now, and it's tough.
Yep.
We talk about Texas. Matt referenced. He just thinks this is one of the best markets in the world. And look, the data is not that far off from making that suggestion. We're just seeing unemployment just fantastic across Austin, even San Antonio. You look at Dallas, so many people are moving. I talk to them daily, Matt, from California. They're fed up. From New York. You're seeing a lot of growth in Austin and in Texas, and then everyone's on Florida and Miami as well. But when you talked about jobs, Matt, I mean, it's all about jobs, and we continue to outshine a lot of the country.
Yeah, we're just very lucky to be here. I feel so blessed. I truly believe that, and everybody can, just like you said, I'm not just saying it, the numbers and the data is here. And just to touch, I know this is a little off subject, but I might have glanced over it a little bit, but when you're talking about our niche, it's there's a lot of people that know this, but they're doing commercial or they're doing high end. Austin's almost becoming a primary market in a sense, but there's not a lot of people that are playing in the space that we are, which just really, really makes it really exciting. And there's less competition, and we have found our little niche. But yeah, general, the idea with this fund is like, it's a bet on Austin, Texas, and it's a bet on TRE. And we just think we're really aligned to make some really exciting things happen.
You know, Matt, I know you talked a lot about what's driving Austin's growth. We talked a lot about, you know, I just referenced, you know, and I know this gets a lot of headlines, but it's really truly there. You know, a lot of the tech hub centric folks from California, they're just fed up with the taxation. There's a lot of things going on the West Coast. I root for them, but I mean, really, Texas is being the opportunist, right, of what's happening on the West Coast. And we continue. I mean, you know, it's so funny. Alex referenced earlier. It's like we have to keep updating this prospectus like every week because, I mean, look, we did this a few months ago, and there's already been like 3 other announcements, right? And especially in these smaller cities in and around Austin, and there's just tremendous growth already. I can't even imagine where we're going to be at a year, 2 years from now. But you know, we're just such a friendly business environment. And, you know, I always go back to population growth, population growth, population growth. Yeah. We just have such a diverse economy in Austin as well that, you know, it's just going to attract jobs from all over different industries. Why don't you guys talk a little bit about, you know, we do a number of things at TRE, which kind of makes us unique, right? So a lot of people doing what we do, they focus on one thing, right? Like, hey, we do apartment communities from 150 units to 200 units. That's our box. You guys look at it a little bit differently. Can you just real quick kind of summarize all the different kind of various profit-making opportunities you guys run in?
Yeah, I'd love to. This is really started from us personally trying to buy properties. And we built a portfolio of all kinds of assets. And Austin is as much as we talk about it, it's still a small market. It really is. And it's really competitive. Everybody talks about real estate in Austin. And so over the years, I have been forced to look at real estate in multiple, I just view it as there's multiple worlds and multiple directions when I look at an opportunity. And so every property has a number at which we would wholesale it and at which we would buy it. There's 2 separate numbers. And we are just very, very entrepreneurial, and we try to make the best decision to make, I wouldn't say the most money. We want to make good money, but we would prefer to keep properties. Because if you can find a way to buy and hang on to properties here in Austin, you're going to be doing well. It's not easy because it is a very tight cash flow market, and we understand that, which is a huge advantage. It's like if we can get as close as possible to cash flow or positive cash flow, let's keep that. If we're not, let's wholesale it, let's flip it. And just to give an example, we're currently looking at a guy that has 15 different properties here in Austin. It could be the first deal of this fund if we get it signed up. But with these properties, we'd get all 15. Maybe I'll just give an example. Like we could flip 4 of them. We could buy and hold 6 of them, and we could wholesale 5 of them. And the concept is let's buy and hold the best ones, but let's make money on the other ones simply to buy more real estate. And so it's really fascinating. It's maybe a little hard to explain if you're not fully in it, but there's different worlds and there's different exit strategies. And simply what we're doing is we're finding value, and we're looking at 15 different ways to exit these deals. We've bought assisted living, we bought mobile home parks, we bought, and we still own these, small apartments, Airbnb, single family rentals. I think last year we did maybe 13 or 14 flips. So it's all kinds of things going on. We really don't even want to flip properties, but if we don't think they're going to be great rentals, then we'll flip them. And if they're not a great long-term rental, we'll do Airbnb rentals on them. And we're currently managing and operating all these different asset classes, which makes it a little bit easier when we see an opportunity to say, oh, that's just like our other Airbnb, or that's just like this property that we flipped. And it's really exciting on our end because it just keeps us entrepreneurial. But there's 15 or 20 different ways to analyze it. And we're constantly being flexible when we're finding value to figure out the best approach.
Yeah, no. I'll kind of speak here for a little bit about just the kind of the review of the offering. And then we're going to have Alex kind of break down our 2021 performance. But real quick, just the highlights. I'll run through this fairly quickly. The minimum investment will be $50,000. We will offer a preferred return of 8%. I'll get to that in a second. So the partnership structure with the 8% pref, imagine that as the first 8% of profit goes into the bucket 100% to our investment partners. After that bucket is full, it tips over and goes into the next bucket. That next bucket is split 60% to our investment partners and 40% to the general partner, which is the TRE team on the call today. I had a really good question come in from someone, perfect timing. One of the things I love and get the most excited about is the tax advantages of private real estate. You will be a K1 investor. We are going to have a lot of flow, a lot of volume of deals. There's going to be a lot to do on cost segregation, bonus depreciation. We want to take advantage of all those deductions that we can maximize and then pass them through on a K1 to our investors and show up as a negative passive loss. So we're going to take advantage of all the interest deductions on the loans, cheaper debt, which Matt will get into here shortly. But we fully anticipate obviously maximizing that tax benefit. The size of this fund, the target is 10 million raised. We're not trying to be a mega fund. That's not our position. We don't want to be in a constant state of raising funds. So we wanted to really, work with the people that know us best, maximize the value, doing what we do best. And we felt 10 million was a really comfortable range for us to place fairly quickly and maximize the benefit to our investors. We will have an annual distribution. That's really the target. That annual distribution will be a cash flow payment. We're targeting an 8% per year cash flow payment. This is a really important one to me. Because of the transaction volume, we can't go to a monthly or quarterly. It becomes an accounting nightmare. So we really wanted to save it up towards the end of the year and pay that distribution at the end of 8%. Now we've backed in, and I know a lot of folks want to see the numbers. The equity multiple or return on investment, is a 2.21x. And our internal rate of return, our compounded return of 19.04% IRR. So we projected out a model based on historical performance of TRE and their entities. And then we imagined higher interest rates, higher inflation costs, right, for renovations. We didn't bake in a lot of appreciation. So we came into this ultra conservative and backed into this number after imagining, what are the headwinds that we could be hit with in 2022 and beyond. There's certain things that we can control operationally. There's certain things outside of our control. We can't control what the Fed's going to do, but we can still control, making money on the buy, staying extremely lean. And essentially, that's how we came into the numbers. Another question I get a lot asked of is, how are we planning on holding the fund? When are we exiting? So the idea would be a 5-year hold. That's our estimation today. There's a lot of strategies we can do on the exit. We could, sell to a portfolio investor, institution, or a wealthy individual. We could sell off these individual assets at a market peak. Or we could say, look, there's a lot of pain on the horizon. Why don't we refinance, return equity, and continue to hold this real estate as a unit and continue to maximize the value. So those are the exit strategies for us. Quickly on fees, I want to be 100% transparent. One of my biggest pet peeves is when general partners aren't very clear on fees. I want to be deadly honest and open. We are not trying to make money on fees. There's plenty of other funds that are going to fee you to death. That was never our intention. Me and Matt even had a hard time even committing to these numbers because we wanted to be as lean as possible for everyone. We have a startup fee of 1% on acquisitions. We have an ongoing asset management fee of 1%. That's the kind of fee to everyone within our ecosystem at Trey, TRE. We've got, an admin fee of 0.5%. Essentially, what that's going to go towards is a really cool company called Juniper Square. They're a very reputable fund admin group. They're going to have a nice portal for all you investors that can log on. We're going to have your quarterly newsletters there, the fund performance. We'll have your legal documentations and your K1s all in that dashboard for you. Property management fee, leasing fees, all of these are going to be done at market rates. They're nothing above and beyond market. We're going to keep everything very clean. We'll make sure to incentivize everyone on the team. Leasing fees vary depending on the types of asset classes we're going to be owning. Mobile home parks different than apartments, and it's different than single family. So instead of listing each one of them here, I just wanted to reference that all of these will be done at market fees. And then our disposition and refinance, we have a 1% fee on the size of those. So very lean compared to other funds that are wanting normally 2% here, 2% there, 2% there. We're trying to really be lean and very competitive on the fees. I like this slide. It always helped me kind of wrap my head around the investment. This is a slide showing a sample 100K investment and what we are projecting over a 5-year hold. So years 1 through 5, we're anticipating the 8% pref being met. So a 100K investor would receive $8,000 per year, every year. And then, based on the appreciation, the equity pay down, all the value we've created, going back to our model, we plan on returning from sale around $81,000 plus your initial investment. So cumulatively, you can anticipate around $40,000 in cumulative cash flow over 5 years, which is pretty good. And the profit from sale at $81,000. Join that together plus your original investment gets to your equity multiple, and then that's ultimately how we backed into our internal rate of return. Again, really briefly, the first hurdle, the first preferred return is 8%. That's the first bucket. After that bucket's met, it steps down to the next bucket where it gets shared 60% to our investment partners and 40% to the general partner. Matt touched on this. We had another really good question come in from someone here, and they reference, hey, look, I've never seen a fund like this before that invests in multiple different vehicles. And I completely share that sentiment. I remember when I approached Matt and Alex about this, this is very unique, but it's needed. Too many of the institutional guys are chasing the same apartment deal. It's becoming a bidding war. Where we really find the value is flipping under every rock and stone and finding these off-market deals that Matt was referencing earlier. So we have a kind of a target allocation that we like. Now, this is subject to change. Maybe we find tremendous value in a portfolio of mobile home parks, right? Where this could be adjusted. But we wanted to give investors a diversified business plan, kind of showing our preferred asset allocation. So not overweighted apartments, not overweighted mobile home parks, in a perfect system. This is how we would allocate our funds into which ventures for TRE. Alex, why don't you run us down? We're about 6:45 now. Alex, why don't you run us down kind of the deals that we've done here recently, and then just we can recap 2021 on performance.
Sure. It'd be cool if you want to go ahead, and I think all these are in the slides.
Yeah, I'll just slide down.
There we go. So this Round Rock 11 unit duplex flip. So this was a off-market deal that we found through the entity TRE Property Solutions, our acquisitions arm. This was a great opportunity. We got 11 duplexes. This was about this time last year, actually. A few months later, but things were really hot. You couldn't go on the MLS and find a duplex or quadplex listed for sale in Round Rock, North Austin, Georgetown, Cedar Park, Leander, Taylor, Hutto. There was nothing there. And we found this package of 11 duplexes. We got them under contract. And what we ended up doing was we bought them. We utilized hard money to buy them, and we ended up selling all of them 2 days later due to a few things that happened along the way. Initially, we were going to sign the contracts, but we ended up having to get a loan. We bought them, and we closed 2 days later with our buyers. Prior to closing, we had contracts with the people who were going to be purchasing them from us. We made a great amount of money on this one in a matter of, I think we had them under contract for a total of 60 days. Then we closed. We're able to sell them to our end investors. We actually, this right here is what we sold them for. We bought them all for about $333,000 each, and we sold them all for $375,000 each. So purchase price was right there at around 365, and we sold them for 4.125. And I wish we wouldn't have, honestly, because by the time that we had gotten the contracts with the end buyers, the appraisals that were coming in were well over what we were selling them for, and now they're worth 450 to probably 470 or so. But this was a great deal. And it was really quick and easy. And these are the types of opportunities that we're finding all the time, similar to the one that Matt mentioned earlier with a guy who has 15 properties. If you want to go on to the next one, Jason, this was an 8-plex that we actually ended up buying from a wholesaler. Matt and I bought this one, purchased it for $515. We still own it and hold it. When we bought it, it was fairly outdated. As you can see in this bottom left picture, rents were about $650 to $700 or so. And we didn't take an approach of kicking everybody out. We wanted the cash flow coming in. We took this one down with hard money as well. And as tenants moved out and we got better tenants in, we would renovate the units. And now each unit is bringing in about $850 to $950, depending on when we got it leased, but it's doing really, really well. And this is in New Braunfels. And one of the reasons we really like this at the price we bought it for at $515 was at this time when we bought it in early 2021, you couldn't buy a duplex in New Braunfels for $350. It was, and prices in New Braunfels have been skyrocketing if you guys are following that market. And now we haven't gotten an appraisal on it recently, but it's I would say it's market value for it would be $850 plus. Don't you think, Matt?
Yeah, for sure. At least.
All right. The next one, Jason. And this was a flip. This is another one that was sourced via TRE Property Solutions. Bought this one for $265. And honestly, I wasn't too sure about this project when we bought it. Matt and I grew up 2 minutes away from this house. And so we know this neighborhood very well. It's right across the road there and the railroad tracks. And, prior to last year's market, I don't think we would have ever bought this house for $265, but we had a feeling it was a good deal. It didn't need much work. Bones were good. Roof, foundation, siding, plumbing, electrical, all that was good. The lady who owned it had like 20 cats that lived with her. And so it needed, to be cleaned, needed new carpet, needed new flooring, but she had an updated kitchen. It had good tile downstairs and everything else was good. So it was really just a quick lipstick for us. The rehab was about $17,000. She had actually had this garage converted as well. So we unconverted the garage back to a normal garage. That's where the majority of the $17,000 in rehab came from. But we painted it, got new carpet, cleaned out the ducts, and we were in and out in about 8 days. and we ended up selling it about 30 days later for $350, and took this one down with hard money too. All right, Pecos. This is in Leander, Texas, another great city that we love. This is a perfect example of what we do here at TRE and what we try and cultivate here at TRE with the in and on concept. Matt and one of our agents went to a listing appointment to meet this seller here. And this lady, she reached out via some direct mail that we were sending. And when they got to this listing appointment, they explained, everything we could do for her. Hey, this is a great house. If you put this much work into it, you could probably list it and we could probably get this for it. We can also buy it if you're interested in just a quick cash offer, if you'd rather go that route. And she decided to go the latter route. She said, I really don't want to list it on the market. I don't want people coming in and out. I'd really like to, just pay the price have y'all pay the price that you just mentioned. Let's close quickly. I'm ready to move on. She had already had a house in Dallas, I believe, and she was just ready to get out of the home. And this is an example of the types of deals that we teach our agents to find. And when they go to listing appointments or when they're out there trying to find clients, to present all opportunities to these potential clients to allow them to choose the best route for them. And in this scenario, this potential client decided that she didn't want to be a client. She'd rather just sell us the house. So we bought it for $220. This was a great purchase price for this neighborhood in Leander. And it didn't need that much work either. She was actually in the process of doing some work herself. She had already ripped out all the carpet. And basically all we did here was paint the exterior. She had some really bad landscaping in the front yard and in the backyard. So we took care of that, painted the exterior. We painted the interior. We replaced the flooring and some little things like, bathroom towel racks, and things like that. And I got this project done in about 2 weeks. It only took $14,000. By the way, all these rehab amounts are funded by our hard money lender. This one was about 10% down, got the rehab funded. Matt got it listed for us, and we sold for $329 about 40 days later. A.W. Grimes. This is one of Matt and I's favorite deals we've ever done. So this one, Matt found, we had seen this deal shopped around to us a few times. Someone had sent it to us at a price, I believe, that was actually close to $2.7. We didn't really like it, but this is right here in the heart of Round Rock, Texas. And there's not that much land available like this, especially with this much frontage road on a popular road like A.W. Grimes. And so we had passed on the opportunity when it was brought to us by somebody else. They ended up dropping the contract. Seller still needed to sell. So Matt reached out to the seller directly. We got this deal under contract and we had a ton of time. And initially, we didn't want to wholesale this deal. We wanted to develop it. We wanted to partner with some developers and go through that process with them and bring some value by bringing this land and this deal to them. And we took it to a few of the biggest developers here in Austin, someone who actually developed probably more than 50% of single family homes in Round Rock in some of these neighborhoods. And they didn't really like it for that. They looked at it for possibly building some low income apartment units for tax credits. And it didn't work out. There's, all these rules that the city has, and this land happened to just fall right in the area where a school was not up to par where they were able to build that. So that fell through, but we kept shopping this around and we had all the time we needed on our hands. Our earnest money was refundable minus a little bit of what we would pay if we did back out of the contract. And so we started shopping this around, and Matt found a local developer who loved this tract of land. And we got him to go under contract with us at 2.7. He did all of his research, got his engineers out there. He spoke to the city, got his PUTA approved by them. And 60 days later, we closed for 2.7. This one was a double close, and we utilized pass-through funding. So on this one, we didn't need to get a loan. All the money we had in the deal was our $10,000 in earnest money. And we utilized his money to close with the seller. And he got this land, and they're actually going to build 98 condo units on this 9.213 acres right there off AW Grimes.
Yeah, great deal, guys. And this is cool to kind of go down these stories and kind of hear how you found them and how you put them together. Alex, why don't you kind of share, look, you guys did a ton in 2021. Why don't you kind of highlight some of the things that you guys accomplished just collectively, big picture?
Sure. So last year was a big year. We only went over four of the deals that fall into these two here. But things really started to take off, as our ecosystem started to come together and work together, as we started to add more agents, as we started to teach all of those within our ecosystem and each one of the entities and all of our agents how to locate and find deals and take them down. This was a result. So we did about 32 flips. We bought and flipped a total of about 76 units, 17 of which were some apartment units. We had 23 what we call entrepreneur partnerships. 14 of the 76 were some buy and hold mobile home park units, 6 Airbnb units. Total purchase volume was about 14.4 million. We paid out a total of $731,083 to our partners. We had 2 assisted living facilities, and we bought 5 buy and hold single family rentals.
Yeah, and you guys can see on the webinar, I mean, the amount of partnerships, that was the thing that we really struggled with, right? We were just constantly churning documentation. It's a little inefficient, and that's one of the reasons why the fund can really streamline this for us and where we can just focus on what we do best. I know we're getting a little late here, so I wanted to make sure we dove into the Q&A, but I think it's really important for me to kind of talk about our core values and what we really stand for. And first and foremost, we're a fiduciary. You're entrusting us with your funds. That means the world to us. That's a really coveted position. So our investors, our job is really just to preserve that capital, grow your wealth and value. I mean, that's at the end of the day, that's first and foremost and paramount for us. The second one that's also extremely important is, we're interacting with people in their lives, their homes, their families. You have to treat them right. And if you treat them right, this is a long-term game and relationship game. If you do the right things, and Matt and Alex believe in this too, and this starts with the operations and the management, you take care of your people, not only your staff, but your residents, and they will pay dividends in the long run. You got to treat them well. I mean, Matt and I and Alex have toured a whole bunch of units, right? We've seen how other people operate. And when I see it, I just think, man, we're just going to offer such an exceptional value compared to what other people have done. And that gets me super excited. Everyone who knows Matt and Alex, know us as we're very, opportunity driven. We're focused on the value add creation side, growing equity and secured profits for investment partners. As you can see from our performance in 2021, really important for us. I think, next I wanted to, a lot of people have been asking me what are kind of the next steps to get into the fund. I'll take a minute here. Obviously today we're doing the webinar. Next steps after that for folks that are interested in the fund, we're going to send out this webinar recording tomorrow as well to everyone who's been on the call and to our email list. But we're asking for commitment or just stating that you're an investor that's interested in investing in the fund by February 4th. This will be on a first come first served basis, right? So we've talked to a whole bunch of investors at this point. We're very excited. They're very excited. But if you have any questions, please let us know at your earliest convenience. Matt, Alex, and I, it doesn't matter if it's on the weekend. We're happy to help address anything that you have. I know we've got some Q&A questions too. Once you've confirmed your commitment, what's going to happen next is we're going to, collect some information from you to make sure that you're accredited. The type of fund offering that we're presenting is a 506C Regulation D. So it's only going to be for accredited investors. So you can, basically prove that you're accredited through a CPA or an attorney letter. You can use a company called investready.com. There's a few others out there. You could also send, tax returns, audited financial statements to make sure that you're accredited. All of this stuff is extremely confidential. It's all under kind of lock and key from us on our end. But it's one thing as sponsors that we have to do is we have to make sure that everyone in the fund's accredited to avoid, any legal, pushback. But once you've told us that you're interested, we will send over all the fund documentations over to you. We'll send it to you in PDF, and then we'll also send it over to you in DocuSign if that's more convenient to kind of help the process. And essentially from there, once the documents are signed, within 1 to 3 months, we're going to be calling that capital commitment from you so we can place it into a really exciting opportunity right away. Our goal isn't to call the capital next week. We want to get this really great duplex deal that Matt's talking about lined up, call the capital or other opportunities, and then place those funds immediately instead of just sitting in our bank account. So that's the generic timeline. Again, feel free to schedule a call with us, email us. I'll share our contact information. We always put this in here, this slide. This is our disclaimers. It goes, this is, there's risk factors with private real estate. There's risk factors as much as we love Austin that are associated with, flipping homes, adding value, doing large renovations. We're not legal experts or tax consultants. So, if you have any questions in regards to this deck, we're happy to address those. We can even get our attorney on the line too to help address any of these concerns. And now it's the Q&A section. I've had some really good questions so far, and why don't I address the first one? I won't name any names here. The first question is, are you only allowing accredited investors? The short answer is yes. And the reason why we had to do that is ultimately we wanted to market the fund to a whole bunch of individuals. And in order to market the fund, you have to set it up in a way to where it's only allowed for accredited investors. We may do another fund, years from now that will allow both, non-accredited and accredited. But for the time being, this particular fund, Fund 1, will be for accredited investors only. I've got a really interesting question on taxation. Yes, you will be receiving a K1 statement from us. Obviously, there's going to be a lot of turning pieces within the fund. Obviously, we talked about the varying different types of property types, but you will be getting a K1 form for this project, and we will be trying to maximize cost segregation. Alex, I've got one question I'm going to roll back up to on the duplex.
Hey, Rebecca. It was not 5 million. We bought for 3.65 and sold for 4.125.
Yeah. Perfect. Next question. We had some questions about internal rate of return. There was some confusion on kind of the return summary here. So to break this down, and I apologize, it's written this way, but we're trying to kind of break it down year by year. So, year 1, 8,000, year 2, 8,000, year 3, 8,000, year 4, 8,000, year 5, we return your 100K initial investment plus the return from sale equaling 189 in year 5. So you get all these returns in year 1 through 4, and then you get the big pop in year 5. So the total return isn't 189,000. It's 189,000 plus all of these annual distributions sent to the investor. Let's see. I think I answered some others here. I think that addressed the equity multiple question that we got from one individual. I had one question. Are we going to cap the equity multiple? No way. No way. This is a no cap situation. So going back to the structure breakdown, as an investor, you get the 8% preferred return. That's the first bucket. That's yours up to 100%. Thereafter, it gets shared 60-40. So, if we look, I don't want to get, overly confident, but if we do something, extravagant, hit a home run, there's no cap to the investor. If we hit a 4X, we hit a 4X, and that's for everyone here. So definitely no cap. I got a really good question, Matt. I guess this one could be for you. Any collateral guarantee against multiple investments within the fund that you anticipate?
Is he referring to like the actual fund or the deals that we're buying?
I think the deals within the fund.
The deals within the fund. Yeah. So if I'm understanding this correctly, we're going out to buy properties, and we're not using all cash all the time. We might here and there, but we're going to utilize hard money, conventional financing. The assets that we're buying will be collaterals to the lender, but I feel like he's asking, or he or she is asking, is if they invest with us, is there collateral to their investment? And so no, you're investing in a pool with us, and the assets we're buying will be collaterals for the other bank or lenders. But I might be misunderstanding that question.
Well, and they get ownership to every property within the fund that the fund acquires.
Yeah.
So it's not like they're just on one asset. They're on everything that we touch.
Yeah. All the deals that we do are all together. The flip, the wholesale, the Airbnb, the buy and hold. It's all owned equally by, per how much you invest.
Great. I had another really good question. Is there, a hard exit at year 5, or may there be an opportunity to roll onward? We're projecting 5-year hold. If we can, and again, we're very flexible. If we're in a really advantageous position in 3 years and we can return a lot of equity to our investors, we're happy to do that. The inverse is also true. If it's year 5 and the market's getting just hammered, we may find it better to refinance and hold, right, Matt, Alex? I mean, really, we need a little bit of flexibility there just to maximize the value, but really the goal is, at that 5-year mark, depending, something really crazy happening in the market, we'd like to skinny it down and really exit at that time.
Yeah. And we don't plan on going anywhere. I want to be doing this 20 years from now. We love it. We have fun with what we're doing. Just like a random example, but I've got a guy right now that called me yesterday, got a 1031 buyer, $12 million commercial broker. And I'm like, man, maybe we wholesale these 15 units straight to him, and just do a wholesale and we don't even buy it. Those are all kinds of opportunities that we're going to constantly explore. And we're just, once again, we're lucky to have the niche that we do, because not a lot of people are focusing on this the way we are.
Yeah, absolutely. We had another really good question come in. So how do we get a fixed 8% per year until year 5 when we get any additional revenue split? One, we want to make sure to meet that preferred return. Keep in mind, back to that bucket analogy, the first bucket is that 8%. The first 8% of profit goes to the limited partner investment partners. After that bucket, it gets shared 60-40. When we liquidate all of those things at one time, that's when that promote will really kick in. So yes, there could be years where the cash flow distribution could be higher. It could be a little delayed depending on the volume of transactions. It might be a little bit lower, but keep in mind that preferred return compounds year to year. So let's say by some unforeseen situation, we only return a 6% distribution year 2, that 2% shortfall in the preferred return gets carried over into year 3. Well, great. These are really fantastic questions. Everyone who asked these, this was excellent. We want to thank everyone again. I mean, we're just, Matt, Alex, and I are just super excited to do this. Selfishly, we're all investors in this as well, right, Matt? I mean, I'm going to be reinvesting everything that I have into this fund. We're putting in a sizable chunk investment, and this is what we do we love this stuff. So we'd love to just execute and do a tremendous job on this fund, be partners alongside you, and you just continue to grow our business.
Yeah, no, it's going to be fun. I couldn't be more excited. This has been a long time coming, and we're ready to have some more scale, have some more firepower, and we're putting our reputation on this. Our name's all over it. Like Jason said, the money's important, that we take care of you guys, and we appreciate everyone that believes in us. And my goal is to make 5 times what we're showing you guys, but we'll talk about that later. So really pumped up, really excited. We're already making offers, and we are ready to roll. And like I said, it's Opportunity City, so we're going to get after it this year.
Love it. Before we sign off, don't hesitate to reach out to us. Please do. If we didn't answer any questions, you want to review this with us. If this is your first time going through, if you're a seasoned pro and you want to pick our brains, we love it. We love meeting everyone. We do have a little bit of a narrow timeline just on the commitment front, but feel free to reach out. We're going to be monitoring our emails, obviously, every hour here to make sure we're getting everything addressed for all of our investors. So thank you so much. Really appreciate it. As I mentioned earlier, we'll send out the recording tomorrow, and look forward to partnering with everyone here on the call.
Thank you, guys. Appreciate you.
Thanks, everyone.
Bye, everybody.
Bye.